All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're gonna get back into TLT. All right, so we'll go over a nice weekly time frame, show you guys, the 5 wave count that we originally had. Saw how we broke down here from those wave 4 and put in the lows. Definitely appears like we bottomed here. We are getting a little bit of a pullback, which you would expect after a 5 wave move to the downside. You'd be looking for an A, B, and then C wave, which the C wave I think can take us up to that 120 area. We'll dive deeper on the daily time frame, go over some of the key levels to pay attention to for right now. And we're going to take a look at treasury yields, okay? Because you need to be tracking the treasury yields if you're tracking things like, TLT and you're trying to trade bonds. So we'll look at TNX on the weekly as well as the daily, all right? And I also want to show you guys the 30-year yield. Now, I am pretty bullish on TLT. I don't think it's going to be like some quick, massive, huge rally, but I do think that TLT has a lot of potential, to eventually hit that 120 area. It may happen soon. It may take a while, but to me, that's almost a guaranteed trade because eventually the Fed is going to cut rates. It's just a matter of when, not so much if. But I do think that yields ultimately are going to end up going higher in the long run, right? And we'll kind of talk about that using this 30-year yield as a little bit of an example for you guys. And then we'll go over the relationship between yields and oil, which, if you didn't know, they typically move together. And right now they're diverging. Okay. And we'll go over what that means. Typically one of them is lying in these cases, and we'll see which one is going to be lying. And then we'll take a look at, bonds versus stocks, TLT versus SPY here. Take a look at this ratio chart here. And just try to find some other ways. Maybe we can get some clues, right? And try to somehow gain an edge in this market. All right. As always, though, content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free trade ideas, free valuable finance content, and I try to sprinkle in, a free trade idea for you guys in there too. Okay, you can go back and take a look at the website, all right, and check out some of the previous newsletters that have been put out because it is also kind of in blog format. So if you want those, you can get it sent directly to your inbox, or you can check out the website. That's completely free to you guys. And we'll start off here with TLT. Okay, so you know, markets typically move in what's known as 5 wave, okay, or 3 wave structures. And so you have your 5 wave structure being the primary trend, the impulsive move. And then the 3 wave structures are typically corrections, right? And those will be, most often come in the form of an ABC. And so we got a 1, 2, 3 down. And then this was a really confusing time, right? Remember October 2022 when stocks bottomed, and we thought that the bond market bottomed, but in fact, it did not. And it was a very confusing time. And I remember telling a lot of people, hey, be patient. Okay. We're trading in range right here in this range. And, ultimately, we're going to look and see, do we break the top of the range or we break the bottom of the range? Right. And we definitely broke down. And once I zoomed out, I was able to see that, hey, we really just had a ABCDE wave 4, right? A triangle structure for the wave 4, which is not uncommon. And, that took us down here. And ultimately, in my opinion, we completed wave 5. And so after this, we would be expecting some type of a correction, okay, in ABC. The three most common Fibonacci retracements are going to be your 38.2, your 50%, and then your 61.8%. And so the 38.2 fib retracement level is going to put us here roughly at 120. We're just going to round up to even numbers for simplicity's sake. And so I really wouldn't be surprised if we catch an ABC up to the 120 area. Now, again, it's just a matter of when, right? And how long that's going to take potentially. If it's going to happen quick, if it's going to happen sooner. Typically, your wave 3 is your most impulsive. So wave 3 would be, 3 or C, and you can see that here, right? You have the wave 3 was very impulsive and fast moving to the downside. And so, our wave C, once TLT does get going, aka when the Fed does start cutting rates, most likely we're going to see TLT moving in a nice fashion. And if we zoom in here on the daily time frame, we've already made a 38.2% retracement from the lows up to the highs. Okay, so we had this very strong parabolic move. And then we retraced 38.2% of it, right? We had a gap down here to fill at 93. We came through, filled that gap, and it's very possible that TLT right now is trying to put in a bottom for this wave B and push back up higher. We've got two gaps up here, one around 95 and then another one right around 97. Okay, now these gaps, they're important to monitor because they fill about 90% of the time historically. The big question is when do they fill, right? Not so much, if they're going to fill. And so if you keep that in mind, you can see that we're much closer to these two gaps up here. So, in the current environment, we are favoring the gap fills up here towards 97 sooner than we are the gap fill down here around 88 and also the one here down around 85. But things can change, right? So ultimately for me, I think if we're going to stay above 93.50, okay, I think that we've got a good chance of continuing higher on TLT. And down there and break below there is really where you want to start to monitor it, okay? And say, hey, it's very possible this thing could come back down to 90 and potentially even to 89. All right, 89.34 is going to be your 618 retracement. And then below there, we've got two gaps to fill. Okay. Now, most likely for that to happen, inflation would have to, the CPI reports and the PCE reports would have to continue coming in hot. The past couple inflation reports came in hot, but PCE came in good, which is the Fed's core, measurement, preferred tool of measurement for inflation. You can see TLT reacted very well to that. Had a very nice day. So it was nice to see that. And it's good to see, it looked kind of rough there, right? I mean, some of the CPI reports and some of the inflation reports, it looked like, oh man, inflation's picking back up again. And, luckily, PCE came in pretty good. So, TLT had a nice day. So, don't overthink it too much. When it comes to these things, just try to have a trade plan, a game plan, right? Are you in this for, the long haul for whenever they do eventually cut rates? You have to know you can't time it, right? A lot of them were predicting rate cuts in March, and now the market's been moving those back to May, and some people are even moving them, past May. So at the end of the day, we're not going to know exactly when, but we do know the relationship between bonds and yields. Okay, if yields go up, that means bonds go down. So that's why you see TLT going down during that, interest rate environment where, the Fed was hiking rates very rapidly. All right. And so if we actually come over here and monitor TNX, which is going to be your 10-year treasury yield, and this is basically the most commonly looked at, treasury yield. We're going to take a look at the 30 here in a minute. But ultimately, I think that this could potentially be setting up for a 5-wave structure to the upside. Okay, now it's very possible that this could have been the wave 3 top. This is wave 4, and then this is 5 right here. We'll see. But in my opinion, I do think it's possible that, hey, this really could have just been wave 3 here. And then in this correction that we're getting, this will be wave 4, and wave 5 will take us back above 5%, yield on the 10-year treasury. Now, what we're looking at here is already an ABC setup. Okay. So if we zoom into the daily time frame here a little bit, we've got a strong move down. We've got a retracement. And in the previous video, I highlighted this section, this zone here. And you can see we came right up to that area, and that's exactly where we rejected. Okay. Initially, we were kind of looking to target some of this once we had a nice little 1-2 setup in the yields where it came up, pulled back, right? We were looking for this move up here. And that was a nice little move. We shorted some TLT, and now it definitely appears like yields are putting in a top here. Okay, they got a nice rounded top forming, strong bearish candlestick right here. And if we're going to continue heading lower, right, basically 4% is that area that you want to pay attention to. Okay, more specifically 4.032. But below there, I think it's possible that the 10-year can break its recent lows and head down to about 3.617 to about 3.413. Okay, those are going to be the bearish targets for 10-year yields if the TNX breaks its most recent lows right around 3.8. Right, those are going to be some of the areas that I'll be targeting. And the 30-year yield. Okay, so when we go back to this one and we talk about this being a 1, 2, 3, 4, 5, and then it would actually, take TNX back up above 5%. Keep in mind time frame, right? This is a very long time frame chart. And so that doesn't have to happen anytime soon. As I mentioned, I do think TLT will go up, to around that 120 area. I don't know when, but that would result in, yields dropping. Okay. But when you take a look at the macro environment, right? And so if you take a look at the whole chart for the 30-year treasury yield, I mean, look at these massive downtrends that it's been in, right? I mean, this is multi-decade long. This is huge, huge, multi-decade long. And this breakout here, this could be the beginning of a secular shift. Okay. So, there's secular and cyclical, and you can have like a cyclical bull market and a secular bear market, right? We're not going to get too confusing, but secular is that much longer term trend, right? So we're thinking 10, 15 years. Okay. And so we may actually get into this environment where we may see higher yields for the next 10 to 15 years. And then we just have these little, these little cyclical bear markets in treasury yields. Okay. Because again, to reiterate, what we're saying here, right? We have a long secular bear market. Okay. And we've just broken that long-term secular bear market, right? You can see there's, mini bull markets in between these time periods. Those are those cyclical bull markets. And so if we're starting, a much longer secular bull market in treasury yields, then we're going to see these little cyclical bear markets in treasury yields. And I think that that's what potentially we're in the middle of right now, is we're in the middle of this really big shift from a long-term secular downtrend in treasury yields to potentially a new secular uptrend in treasury yields. And we could be potentially in the middle of a cyclical bear market in treasury yields, meaning that, hey, yields may go down, you know, over the past year or two. But ultimately, they do have a lot of potential to, actually really continue going higher over the next, 10 to 15 years. So I just kind of wanted to throw that in there. That's kind of my take, and I really wouldn't be surprised on it if something like that happens. You can see it's pretty much basing, in this range right here, consolidating from, some lows around 1997 and some lows around the early 2000s. And all we've done is just come back and made a nice little retracement back into those zones. And, we're just looking now to see, hey, do we really break out from here and start a massive uptrend? Or, are things about to roll back over, right? And their yield's going to continue to drop. Now, I wanted to explain the relationship between interest rates and oil. If you didn't know, what we've got is USO right here. So this is basically an ETF to kind of monitor the price of oil. Okay. And you can see that TNX and white here, that these move together very well, right? I mean, they peaked on the exact same day here. Okay. And then they started downtrend. And then if we take a look here, we have this area where we have lows and then higher lows, and here we have lows and lower lows. So one of them was lying right here, and oil was actually the one, quote unquote, telling the truth, because we see that yields actually started to rise afterwards. And we're in this period here again where, we've got a high, okay, and then we've got equal highs and a breakdown, but in oil, we're actually making new highs. So if oil potentially is a leading indicator, then we could actually see yields start to rise here. And if you notice, we're basically at old resistance right here on the TNX. So old resistance sometimes can turn into new support. And this is something that would result in TLT going down a little bit in the shorter term. Okay. And if you take a look at the TLT versus SPY ratio, so this is basically just showing you the performance of TLT versus SPY. This looks like it's ready to break down right here. I mean, this looks, you got a triangle pattern, bear flag, whatever you want to call it. It's tested this trend line here a couple times, and it looks like it wants to break down. So, if that breaks down, that could be just another factor to consider along with the TNX chart here, compared to oil rates, and we're going to see, hey, maybe this is just a blow off top in oil. All right. And so what we see is basically a little bit of a false breakout, right? And this right here just kind of turns into a little bit of an oopsie, right? And then we actually start to see oil roll over and start to drop here. Or we could actually start to see TNX start to rise, yields start to rise. And again, that would result in something like TLT dropping. So hopefully you guys enjoyed today's video. If you did, smash that like button and subscribe to the channel for more. Okay, you guys can join the Investment Intelligence Discord. It's only $10 a month, right? So, the newsletter is completely free. You can sign up for that. Or if you guys want access to all my different analysis, all the different trade ideas, as well as many other valuable resources, then feel free to join the Discord. You can see some of the screenshots over February. February was a pretty nice month. Lots of crazy earnings plays. I definitely will say that. It's definitely been a roller. What a crazy earnings season, by the way. We just have to say that so many stocks are going up 20%, going down 20%. I mean, if you're someone who likes to bet with options, there's been a lot of home runs and a lot of jackpots that potentially you could have hit, this past earnings season. And it's one of the most exciting earnings seasons that, I've been in for a while. All right. So yeah, that's the Discord. This is the newsletter. Sign up for those. Links are in the description, and I'll see you in the next video.